BMO ETFs are sponsoring today's educational video in which I'm going to tackle two ideas. Why and how you might want to de-risk a portfolio using an asset allocation ETF as an anchor. And two, when choosing which ETF provider to use, you may want to look at how they vote on your behalf at stockholder meetings for all the underlying stocks held inside an ETF, which is something that may have never crossed your mind before, but once it does, it might influence your ETF selection. I know there are a lot of people who hold some, and in some cases a lot, of Bitcoin or Ether or other cryptocurrencies. Or maybe they might own some meme stocks like GameStop or AMC. These very speculative investments might have a lot more risk than you think. Hey everyone, my name is Preet, and this channel is for anyone who wants to learn more about personal finance, investing, and the world of money around us. Okay, so let's start with the volatility and risk of cryptocurrencies and meme stocks. A lot of people hold Bitcoin and other cryptocurrencies as speculative investments. Some might trade in and out, and others might be planning on holding them and not selling for a while. At least that's their plan. One of the main reasons for the appeal is the spectacular run-up in price in a relatively short period of time. Right now, as I'm recording this, Bitcoin's price per coin is about $47,000 US, but it's only been around for just over a decade. And a single Bitcoin was, at one time, worth less than a penny. That meteoric rise alone has led a lot of people to imagine what would have happened if I had just put in $10,000 into Bitcoin when it was only $50. And you end up with a hypothetical number like it would be worth $10 million today or something. Of course, the reality is that even if you had bought in a long time ago, most people would have gotten out along the way, either because you might have gotten out when your original investment doubled, or quintupled, or even 10x'd from $10,000 into $100,000. Or maybe you did hold on until it 100x'd to $1 million, but by then most people at some point along the way would have said, wow, I hit the jackpot, let's get out now. So first of all, don't beat yourself up over missed potential gains because very few people who did get in early actually held on to get those gains without selling along the way. We also tend to forget about all the people who bailed because they experienced some incredible downside volatility as well. In 2021, Bitcoin had a drawdown of over 50% in about 1 month, from April 14th to May 17th. The previous year, 2020, saw a drawdown of 60.8%, but it took 9 months to happen, from June 26, 2019 to March 12, 2020, and in almost exactly 1 year, from December 17, 2017 to December 15, 2018, it lost a stunning 83.6% of its value. And that wasn't even the biggest drawdown on record. For every story you hear about people who've become Bitcoin millionaires, there are likely just as many stories of people who lost a lot of money too. We just don't hear as much about those stories. It's an insanely wild ride. Imagine having a $100,000 balance and then seeing that drop by 83.6% to $16,400 over the course of 1 year. It might be easy to buy the dip with a 10% correction, but with a 50% correction or more, you start re-examining your worldviews. Trust me, it's just not that easy. So with that said, let's take a look at the risk contribution a speculative investment might make to a globally diversified, balanced portfolio. For disclosure, I own equity in a company called WealthScope, and I'm also on the board of directors, but WealthScope has a sophisticated portfolio analyzer tool that goes a bit beyond just looking at Sharpe ratios for a portfolio. In particular, it allows you to see the risk contributions of different parts of a portfolio. And if you take a typical 60-40 couch potato portfolio and add a small allocation of 2.5% to each of the two main cryptocurrencies, Bitcoin and Ether, we might get something like this. We have 40% in short-term bonds, 15% tracking the S&P TSX Capped Composite Index, 15% in the S&P 500, 15% in the MSCI EAFE, and 10% tracking emerging markets, and the remaining 5% split evenly between Bitcoin and Ether. Now, these two pie charts show us something pretty interesting. On the left, we have the broad asset allocation breakdown. We see that equities represent 55% of the portfolio, fixed income is 40%, and the alternative asset class in this case is 5%, which is our exposure to Bitcoin and Ether. But if we look at the pie chart on the right, we are looking at the risk contribution of these asset classes. We see that while our 55% equity asset allocation was responsible for 66.48% of our risk, the small 5% allocation to cryptocurrencies contributed 32.17% of the risk of the portfolio for the time period analyzed. So even a little bit of exposure to individual speculative bets have an outsized impact on a portfolio. If we replace our two cryptocurrency holdings with meme stocks, AMC and GameStop, both at 2.5% weights again, let's now look at the risk contribution at the security level. AMC alone contributed 24.41% of the risk, and GameStop contributed a whopping 68.94%. Now, volatility works both ways. It can lead to large returns, and it can lead to large losses too. But that actually suggests that speculation should, at best, be limited to very small positions in your overall portfolio. If you had $100,000 in a portfolio and 90% was in speculative bets that could lose 80% of their value, then let's do some quick math. 90% of a $100,000 portfolio is $90,000. An 80% drawdown of that $90,000 allocation translates to a $72,000 loss, turning that $90,000 into $18,000. So if the quote-unquote safe 10% of your portfolio didn't change in value, your original $100,000 would get reduced to $28,000. Conversely, if all your speculative individual bets were just 1 or 2%, your losses are limited to just 1 or 2%. And if they do perform well, it can add a bit of juice to your portfolio. What I'm advocating for is that if you have large, risky bets in your portfolio, rounding out your portfolio with less risky investments isn't going to do much. I think you might want to look at it the other way around by using a prudent anchor, like an all-in-one asset allocation ETF for the bulk of your portfolio, and then limiting your exposure to riskier bets. And there's a few ways of doing this. If we take a look at BMO ETFs asset allocation ETFs, these are all well-constructed portfolios that are globally diversified. They rebalance automatically. The MERs are 0.2%, so they are very cost effective, and they hold thousands of underlying positions, both stocks and bonds. Hot off the presses, BMO ETFs have just launched a new asset allocation ETF to their lineup, which is 100% equity. The BMO All Equity ETF, which trades under the ticker symbol ZEQT, is something that I know a lot of people have been asking for. Previously, their most aggressive asset allocation ETF had an 80% equity and 20% fixed income target, whereas ZEQT will have a 100% equity target. Other than that, it will have all the benefits of the other asset allocation ETFs in the lineup. A professionally constructed portfolio that is globally diversified with thousands of underlying positions around the world. It rebalances automatically and is very cost effective. I'll include a link to the video I made on why these asset allocation ETFs can be a complete portfolio solution, and indeed, many people put 100% of their money into asset allocation ETFs and call it a day. But if you have decided you want to allocate some money into certain investing themes, whether it be crypto, innovation stocks, green energy initiatives, or what have you, then here's an option I want you to consider. You could choose an asset allocation ETF as the bulk of your portfolio and then hold very small positions in any speculative bets. Alternatively, instead of picking individual bets to add to the portfolio, you could get some diversification in those general areas as well by using thematic ETFs. Using BMO's asset allocation ETFs, we have 4 anchor options: ZCon, ZBAL, ZGROW, and ZESG, which is like ZBAL but tilts towards companies with better ESG ratings. ESG stands for environmental, social, and governance ratings. You could put, as an example, 90% into ZBAL, and then with the remaining 10% of your portfolio, you could hold either individual positions in riskier investments, or you could hold a thematic ETF to get some diversification into a specific theme like clean energy or whatever. I'll include a link to a list of BMO's innovation ETFs as well. And again, keep in mind that your anchor asset allocation ETF may include exposure to the individual companies you are most interested in, and while you may want to have a slightly higher allocation to those companies, just know that there could be some overlap because, again, these asset allocation ETFs hold thousands of underlying securities. This is just one idea to consider. Instead of your portfolio being mostly highly speculative investments with a few more prudent investments to round it out, maybe you want to think about it the other way around. Mostly a prudent portfolio with just a small allocation to speculative bets. And speaking of ideas, if you are an active investor, and particularly if you are a do-it-yourself investor looking to diversify your information sources and learn more about setting up your portfolio, you might want to check out the weekly webinars at etfmarketinsights.com that is sponsored by BMO. You can submit your questions to investment industry experts, and the panelists on the weekly webinars can give you their take. They are held every Friday at 1 p.m. Eastern, and I'll include a link to those in the description as well. Now, the last thing I'll mention is quick, but it's important. When it comes to picking the ETF provider that you want to use, you may want to consider how they vote at all the shareholder meetings for all the underlying companies held in those ETFs. When you hold an individual stock, you'll likely have received notices of the AGM, the annual general meeting, during which all shareholders can vote on various issues. Some issues are a bit administrative, but some are quite important. But many individual shareholders do not cast their votes, and that means your vote could go wasted. And if you submit a proxy and don't specify your vote on any proposals up for a vote, your vote might be counted as a vote in line with whatever the board of directors recommends, which might be good, maybe it isn't. And if you hold shares through a fund like an ETF, the fund provider may hold the voting rights for millions upon millions of shares of many companies. So here's what's key. BMO Exchange Traded Funds takes their voting rights quite seriously and will vote against management from time to time. They have demonstrated a track record of incorporating ESG issues into their voting strategy. If you are interested in pushing for ESG improvements by companies, even if you're invested in passively managed funds, you might want to consider this when choosing which ETF provider to use. If you like this video, hit that like button and subscribe to my channel to learn more about money and managing your finances. And of course, hit the bell to turn on notifications for when I publish new content, and I will see you in the next video.